You found the home and you want to make an offer, but you remember that your realtor once said a home is an investment where you can either make money or lose money. This is where making money begins. How is this exactly done? Is it magic? The answer is no, and I will go ahead and break it down for you. This is Brian Mason, your Northern Virginia realtor. Your agent begins by conducting a comparative market analysis. This report will analyze different homes through different statuses that will provide an estimated range of the current market value of the home you intend on purchasing. The standard comparative market analysis reports tend to contain the following data. Pending listings. Pending listings will not tell us how much the home has sold for, but we will know that the home did receive a contract while it was advertised at a certain price. In association with this, we want to look at the days on the market too and the pricing history of the home. Sold listings. Homes that have closed within the past 6 months are your comparable sales. These are the sales an appraiser will utilize when appraising the home for you along with the pending sales, which will likely have closed by the time your home is sold. Realtors and buyers must focus on the comparable sales because it represents an estimated market value. This will be the best tool to ensure you simply are not overpaying for your home. If we notice that the homes in the neighborhood are lower than the asking price for the home you want, then we might want to offer a lower initial price compared to the advertised price. If the home is in the range or just lower than what the homes have sold, then it is an indication that the advertised price is fair. Nothing wrong with going a little lower depending on other factors discussed in the previous video. Expired listings. This group will reflect the highest median advertised price because they did not sell and were probably unreasonably priced. From these homes, we will have to take a baseline at what price the home will not sell for typically. If the condition and the price of these homes are similar to the one you want to make an offer on, I would suggest offering a lower price than the advertised price, but it does depend on the current market conditions in the area. Examining other homes. When you are utilizing other homes in a comparative market analysis, you want to make sure that the homes are similar. You cannot compare the price of filet mignon versus a candy bar. Sure, you can eat both, and they probably have the same caloric intake, but the prices will be significantly different. Comparables are those that most closely resemble your home. It is difficult to compare a tri-level home to a single-story home. Select the homes from this list that are mostly identical to your home in size, shape, condition, such as similar square footage. Appraisers compare homes based on square footage. Larger square footage homes are usually worth less per square foot than smaller square foot homes. The variance among a group of median price homes ideally should not exceed more than 10 to 20% variance in a square feet, plus or minus. Similar age of construction. Ideally, the age of the home, the year it was built, should be within a few years of other comparable sold homes. Mixed age subdivisions are common. For example, in one area of Falls Church, Virginia, a subdivision consists of homes built in the 1950s and they jump a couple of decades to the 1970s and then the 1990s. Although the homes are located next to each other, the homes are loaded with character from the 1950s sell much more than newer Brady Bunch counterparts made in 1970. If your home was built in the 1980s, say, and a brand new homes are up in the street are selling for more, you cannot command the same price as a new home. Similar amenities, upgrades, and condition. Appraisers will deduct value of the home if other homes have upgrades and yours does not. A home with a swimming pool will have a different value than a home without a swimming pool. Remember, pools aren't worth as much as you would think. A completely remodeled home is worth more than a fixture. Homes with one bath are worth less than homes with 2 or more baths. Deferred maintenance will also count against the value of the home that you're trying to buy and should be taken into consideration in your offer. Location. Everybody knows that real estate is valued on location, location, and location, but have you considered what that means? A home with a view of the city, for example, is worth much more than a home facing a cement wall. Homes located on busy roads are worth considerably less than homes on a quiet street. Compare your home to those in similar locations. If your home sits across the street from a power plant, look at other homes with power plant exposure or those located along railroad tracks, among other undesirable locations. Hopefully, this helps you. Subscribe to my channel to get the latest and greatest videos. And until next time, next video, this is Brian Mason, out.